Hello and welcome to Pro Trader Strategies Market Commentary for Friday, December 11th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that all comes in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these daily market commentaries, but I go a little bit further and talk about trades that I'm putting into my portfolio, whether it's options or stocks, to increase my portfolio's yield. Now, for you all out there, over my 25 years of experience trading options, I've streamlined the process for you guys to find the right strategy for any given assumption. If it's a bullish assumption, we aren't just buying calls. What we do is we look at that underlying, check it out, see what's going on in and around it, and find the right strategy for a bullish, bearish, or market neutral assumption. So please go to Pro Trader Strategies and check out my webinars there where I go into major detail as to the intricacies of these different option strategies. I don't have enough time to really go over it in these daily market commentaries, but I do try to brush across some of those rules and guidelines that I have set out there, but not really in as much detail as you'll find in some of those webinars on YouTube and in at protraderstrategies.com. All right, so let's get on with the economic data. Across the pond, we got European German final CPI coming in at negative 0.8%, in line with expectations there. Italian industrial production ramped up a little bit at 1.3%, expected to be 1.1. Back here in the United States, we got core PPI, which is producer price index, month over month coming in at 0.1%, expected to be 0.2%, so a slight miss there. PPI month over month, when you put back in the food and energy, we got a 0.1%, which was in line with expectations. Now, year over year, I saw that this number came out much better than expected, so that is a positive. Then we also got the University of Michigan Consumer Sentiment. Now, this will get revised, but it did come in. This is the preliminary. We'll get the revision and the final in a couple of weeks. But anyway, something good to look at here. 81.4, expected to be 76.1. So really knocking it out of the park. And the inflation expectations coming in at 2.3%. In line with expectations there. Now, keep in mind this University of Michigan Consumer Sentiment being 81. Before the pandemic, we were in the hundreds, which was a major coup, if you will, because that in the hundreds was something we hadn't seen since basically 2008. So during the Trump administration, we really saw this thing start to ramp up quite nicely there. All right, so let's get on with the, actually, let's talk about a little bit of geopolitical stuff here, right? We have the stimulus package, and all of the politicians are playing politics right now, and we're seeing some major shutdowns. New York just announced that on Monday, all indoor dining and bars are going to be closed. Now, you can sit outside in a tent with some carpet, and that's somehow different, which is just bizarre. They are shutting this down, no stimulus package because of politics, and that is really starting to wane on the economy and really going to make it very difficult because, you know, although we have this vaccine and they're saying in a couple of weeks some people will be able to start receiving this vaccine in the United States, but for mass distribution, that isn't going to be until the fall, you guys, and that is a long way away to have the economy shut down. It's been a long way already and really hurting people, and that is going to really start becoming a struggle. And the equities are starting to show some kinks in the armor, and we're starting to see some pullbacks. How far are we going to pull back? Well, it's going to start being a bigger and bigger dark cloud over the horizon there. All right, so crude oil is coming off just a little bit today, but somehow holding on to the 45 and above handles. I would expect this market to really start to slide down, especially if we're going to start seeing some more shutdowns. That's going to really crimp any type of demand for the fossil fuel there. Gold making a move higher here by almost $10. Finding a little bit of a bottom in and around this 1800. That's where markets are really starting to defend this. I still believe that this market is going to move back up into the 1900s, but there's a caveat to that. That is the stimulus package that it doesn't seem like we're getting anytime soon. But I'm not involved in this right now. I did get out of my gold futures or my gold trade in GLD, GDX a couple of weeks ago before this pop happened. I got in a little bit early. But having said that, the overall market is showing some strength today. I don't think it's anything other than maybe some short covering there, because there is no hope that there is a stimulus package anywhere near. As a matter of fact, they're talking about government shutdown because they need to get some type of package across the finish line. And if that happens, it's really going to push that way out if they start having government shutdowns there. All right, so bonds moving up. Not quite a point, but up 20 ticks on the day. It's at the point of control. I do still firmly believe that this is going to go back up to trade with the 177 handle, because I do not think they're going to raise interest rates anytime soon, especially if we are seeing government lockdowns across the board. It's just not going to happen there. So bonds should, move to the upside, lowering interest rates. All right, that's a teeter-totter effect there. Bonds go up, interest rates go down. We would like to see interest rates go down. Yes, some people would say that the housing market is really frothy right now. Home prices are going through the roof, and that's basically because we have suppressed interest rates. Well, at the end of the day, that isn't the end-all, be-all of raising interest rates, you guys. All right, the VIX here, you can see we're seeing another spike today. Nice spike up into the 24s there. As you can see, moving back towards that time volume of the new 20s are the new teens for the VIX. And that's because we're seeing some equities show some weakness here. As you can see here with the Dow Jones Industrial Average pulling back to the 100 Fibonacci that I have lined up here. I do have some extensions lined up, but this is what we saw as a high from before the pandemic. So I'm going to leave that in there. Plus it lines up so beautifully with the value area high that I've got to leave it in there. That's going to act as a really solid support level there. Breaking down below this Fibonacci, we would definitely expect it to go down to about 28,350 there, which is lining up with the point of control. As you can see, the volume node, that would be a comfort zone. You might find a little bit of support on that 50-day simple moving average, but if we start seeing some correction here, it's going to start rolling back over and start pointing at that point of control as well. We'll have to see how that works out, though, going forward into next week. And or towards the end of the day, if we start seeing a massive sell-off and break below that level, that is going to be something to keep an eye on. Now, yesterday we got a bit of a pause in the NASDAQ, but today continuing to the downside, down 134 points, testing my old trend channel. And as we can see, we can pull back on this trend channel and see how long ago this thing was put in there. And you can see it's not even... it was basically over 3 years old. So I've left that in there as a trend channel for the NASDAQ for quite some time and waiting for that to come back into line there. And we're starting to see that now. And then we move over to the E-mini S&Ps. They're showing weakness as well. Yesterday, it looked like we got a little bit of a bottom. NASDAQ looked more of like a pause and there was going to be some continuation, but that's not really necessarily out of the realm there, as we've seen tech really struggle in the past few days. I've talked about that about all week, right? And for months now that I thought that there was going to be some type of sector rotation out of tech and into something like the financials, which are a little bit undervalued on their multiples there. But overall, right now, it's like people are looking to cover. We're back below that 9-day simple moving average, which is going to show short-term weakness. We will find some support around 35.82. That's going to be the first line of line in the sand to find some support there. And I've actually considered redoing this chart to where I pull this back down to make this the 100 and then do some Fibonacci extensions on top of it. But I haven't played around with that at this point. We're looking over at the mini S&Ps here on the breakdown of the daily, and this is the overnight trade there. You can see pretty much weakness across the board. Got a bit of a bounce heading into today, but for the most part, without a stimulus package, people are really starting to worry and starting to hear about more lockdowns. That is going to really crush a lot of people. I mean, people are struggling right now, especially in the travel and leisure sector. And if this starts really ramping up again, where they start ramping up the closures, that is going to really start hurting some people. All right, Best Buy. Yes, I put this trade on yesterday, but if it breaks below yesterday's low of 99.73-ish, right around there, if I break below this candle, doing a golfing today, I'm going to be pulling the ripcord on this. As you can see, the low $99 basically is where I'm going to dump this trade. I bought some calls in there, and I'm going to have a quick trigger finger on that if we start seeing that engulf that bottom candle there. All right. CECE Environmental. Now, if you guys remember, I did this, talked about this back here in basically May 11th is when I bought this stock. I did it because they are not really a competitor. They're a smaller company than, say, Carter. But Carter has a lot of ways. Carter is basically HVAC, okay? So it's all types of commercial heating and air conditioning, okay? And some of what goes into Carter's business is these HEPA filters, and they've also got these blue lights that they can put in the ductwork to really kill this coronavirus. Well, CECE Environmental Corp also has similar products to that. Now, I bought this because it was a penny stock and it was something I could throw in my IRA just as some funny money and let it ride out. I thought that they would do very well, and they have. They made a major move to the upside as people started noticing them. And I just went out and bought the stock. It doesn't trade really enough to have options. And, you know, when you're trading stocks below $5, it's no real sense in going out and buying an option as far as I'm concerned. You might as well just buy the stock. So I went in and bought this stock on the 11th of May and bought up the ticker symbol is CECE. And I bought it for $4.76. I sold out of it today for $7.25. Why? You know, it's right there at the point of control. It seems like it's gotten stuck a little bit there. They did beat on earnings before, got beat up. I think they may have missed on this earnings here, this latest earnings. It was pretty much in line with expectations. They got beat up. I got a bit of a rally, but at the end of the day, I don't think that this thing is going to rocket off the moon like we saw with Penn, where I bought that at $4.49. I bought this at around the same time there. And I thought that they would really get some business going, and it just seems like everybody's going to the Carter. So I thought that they would track with Carter, and they're kind of slowing down. So I decided to get out of this, and I decided to put that money to work with 22nd Century Group. It's a technology or a company that basically can extract nicotine from tobacco. And as we know, all of these vaping things are going on. Well, they have a patent on how they extract this. They can also do it with THC from marijuana. And with all of this stuff going cannabis, they have a pretty good handle on that sector as well. As a matter of fact, somebody was telling me they can actually increase the strength of the THC strains that they pull out as well. So I got into this today on this bit of a move. They've traded, I think, over 9 million shares today so far. Just over 9 million shares. So they're starting to get noticed. So I bought it in right around this area at $2.52 today. So just kind of rolled out of my CECE Environmental and rolled it into the 22nd Century Group. All of this done in my IRA. I am going to put some of this into my trading account as well. I just haven't done it. It was just really blasting off. I got into this, and literally this morning, if I throw this down into a probably a breakdown of a 5-minute chart, you'll see the screaming out of the gates here. And I basically got into it right around, right in here, 250-ish. And the market just started spiking really fast. This is obvious. This is a 5-minute chart too, people. And by the time I started going over to my trading account, I was like, all right, I'm going to take a breather here. This thing is just blasting off way too fast. I'm going to wait for a pullback. So I'll probably be doing that in my trading account relatively soon. As a matter of fact, why not just jump on it right now while we're talking about it so I don't miss the opportunity. And I'm just going to throw it in there to buy some shares here real quick. And I'm going to increase my size there just a little bit, go to a tranche, and bang that out. All right, put it in at $2.47. So we'll see. If I get a bit of a downtick here, I might be able to get those. But I'm going to play around with it. I'm not going to let it go. Anyway, so it's not advice, you guys. This is what like Jim Cramer started Mad Money all about, and this is the kind of part of your portion of your portfolio where it is some of the riskier assets, and whatever you are investing in something like this, you could expect to lose that money. But, you know, a lot of upside potential for this company, so that's something to keep an eye on as well. All right, they do have options. Actually, they have pretty tight option markets in this stock. I haven't really looked at the volume and open interest in there, but I would have to assume with the they're jamming on the volume and open interest today as well. So people are starting to notice this company. It might be something to throw a little bit at. Good opportunity, you know, for some throwaway money. Anyway, not really investment advice whatsoever, people. This is just a mad money trade that I was talking to some friends about, and they cued me in on it actually a few days ago, and then I didn't jump on it. Wish I would have, but today I decided to pull the trigger on it. All right, so that's about it. Nothing done over in my options that I have on. I haven't added anything else to my portfolio. I'm just keeping an eye on this. We are seeing a bit of a pullback here across the board. Am going to keep an eye on Best Buy because I'm not going to stick around with that for very long if we break through that chart setup, which is why I got into it, is on the chart setup. If it breaks that pattern, I'm out. All right, so that's about it. Other than one last thing I guess I got to talk about is the disclaimer. Please take a moment to go over that, as we're an educational company. There are risks of losing money while trading, especially if you're thinking about this 22nd century. You could lose money there. That's about it, though. Folks, that's all I got for you guys. I hope you have a great weekend. And if you can't take that, take it easy.